that we are tracking closely is Brigade Enterprises. It is doubling down on its presence in the Chennai market. The company will launch a mixed-use development at its recently acquired land bank on Mount Road, with home prices starting at 20,000 rupees per square foot. In an exclusive chat with CNBC TV 18, the company's MD, Pavitra Shankar, told Jyoth Saneth that she expects the Chennai and Hyderabad markets to contribute more to residential sales in the next 5 years. Here's a slice of that conversation.
We are predominantly a Bangalore-based firm. We are about 37 years in business, and a lot of our current presence happens to be in Bangalore. That said, and Mysore. That said, we are developing across Chennai, Hyderabad, Kochi, Trivandrum, some of the smaller cities in South India as well, and also GIFT City. But over the last few years, we've really expanded our footprint in Chennai specifically. So far, we've already done 3 to 5 projects across residential, hotel, office, and a small retail building as well. So true to our I guess what our ethos and our our initial steps as well. We have always been a multi-domain player in real estate, believe in mixed-use developments, and this is how our initial projects have come about. Right. Now our plans for Chennai have expanded dramatically. It will become our second largest market after Bangalore, and we are looking at developments across office, hospitality, and residential, of course, and we'll also be doing a bit of retail.
I want to talk to you a little bit about the location where you will see this investment go in Mount Road, one of Chennai's more iconic landmarks and the arterial road in the city. It also comes just years after you made that big ticket acquisition itself from the TVS group on Mount Road itself. If you could just take me through what kind of potential the project has. I believe 13,000 crore rupees is what you're looking at in terms of fiscal potential from it. But what kind of a development will you see at the project, and what kind of segments will this cater to? Residential, office, what kind of mix are you looking at as well?
So just on the numbers overall, we are looking at 15 million square feet to develop across all of the segments, that's residential, office and hotel, and the investment for that is around an additional 8,000 crores. That does not include some of the land investments already made. Of that, in the next coming year, we plan to launch a few projects, around 3 million square feet in residential and 1 million in office in the next financial year. Specifically, the project that we're talking about on Mount Road, that per se, the value of that project is more around 1,800 crores. So the 13,000 is for our overall pipeline of residential projects actually. This one specifically is around 1,800 crores from the residential piece alone. So this is a project that is mixed use. It's about 1 million square feet in total. 60% of it, or 0.6 million, will be from residential, the rest of it from office and retail. We'll be launching around 200 apartments. Starting from 3, 4 and 5 bedrooms, which includes penthouses. And we are excited to see how this goes. It's a G plus 38 story building, so it's going to be very iconic in terms of the height, in terms of the location, and definitely in terms of the design as well.
I recently read, Pavitra, that you've earmarked around 1,200 to about 1,500 crore rupees for land acquisitions itself. If you could just take me through what kind of acquisitions you're looking at, what kind of land banks you're looking to procure, and what will the split be between your major markets? Is there a strategy at play, and where are you focusing on?
So we would like Chennai and Hyderabad to take a larger share of our overall portfolio, whether it is residential, office or hotel as well. In the hotel space and retail space will be much more opportunistic. But across the board, I think our markets of focus are basically these. In terms of the land investment, yes, around 1,000 to 1,500 crores is what we're looking at on average. Again, it is really based on the opportunities that come to play. We'll be looking at both joint development as well as outright. So it really kind of depends on what the landowner's preference is. And in terms of how much share we would like, today Bangalore contributes around 90% of the portfolio if you look at last year in terms of residential sales. We would like for that to actually have more contribution from Chennai and Hyderabad in the next 5 years. Maybe Bangalore will come down to around 70 or 65% if we're able to grow at the same kind of success that we've seen so far in Chennai, that we would like to replicate in the other spaces as well.
Well, some interesting perspective coming in from Brigade Enterprises, but that's all the time we have on this edition of Midcap Radar. Your stocks when we return.